One of my largest holdings over the last few months or so was actually Warner Bros. And in the last couple of days, we've actually seen this stock jump up a massive, significant amount. I think it's approximately up now, 30 to 50% is changing by the minute at this point. It's not looking massively stable, but it is also looking to be as if it could potentially ride this high. In this video, we're going to be assessing what exactly is happening with Warner Bros. Currently. Are we expecting to see this stock tumble back down, or can we expect to see this rally just continue? So in this video, we're going to be going over intrinsic valuations, we're going to be going over analyst reviews, we're going to be going over chart technical setups. So strap in and let's get straight on with this analysis. Before we do get into this, I am not a financial advisor. None of this is financial advice. This is just my own personal opinions and is to be taken with a pinch of salt, of course. So looking on a prediction here on MSM for Warner Bros. Discovery, we can see that there is a lot of volatility priced into this stock in the coming 90 days. If we look at analyst recommendations here, we can see that the general consensus at this current price is a buy. However, if we do now look at analyst price targets, the average is below where we currently are, down at 15. Now, of course, this doesn't necessarily account for the recent news of Paramount potentially buying out Warner Bros., with potential rumours currently lingering around which suggest that Paramount is preparing a mostly cash bid for all of Warner Bros., including its studios, cable networks and streaming assets. However, what is very, very important to note at this time is this is not a done deal. No formal offer has yet been submitted, and it would face regulatory and antitrust scrutiny given how many media/news assets are currently involved. But if this is a successful deal, this would bring together two of Hollywood's best known studios, as well as a streaming service, HBO Max and Paramount Plus. Now, I do not at all claim to be an expert in Paramount and TV streaming at all. If anything, I'm quite the opposite. I am someone who doesn't watch any TV at all. I just don't find time for it. So I have no experience in the live streaming world. However, when I see a chart looking the way in which this was looking when I bought in, that is why I bought in. So let's just quickly go over a technical setup right now and as to where we can expect this to head, just looking at the chart, and then we'll move on to a financial and intrinsic valuation. So looking here on the chart, these are all of the exponential moving averages. We've got the 50, we've got the 100, we've got the 150 and the 200. So right now, as you can see, we are well above all of them, of course. And another thing in which I do like to look for is a golden crossover, which is where this 50-day moving average actually crosses and stays above the 100-day EMA. This essentially acts as a moving average convergence and divergence, which is, in other words, a sense of monitoring momentum within a stock. And when I see this bullish crossover, typically that's where a lot of large money tends to start to pour into a stock. It shows that momentum is on its side. So for me, this is approximately where I bought in. I can't actually remember exactly where it will be on my average buy-in, but I have been somewhat dollar cost averaging into it as it was falling back down. With no major levels of resistance on the horizon for Warner Bros., at least short-term resistance, I don't think there should be anything on that scale to bring this momentum to an end. I think the main thing will be these Bollinger Bands, which is essentially a dynamic RSI, a relative strength index. And currently we are seeing that Warner Bros. Is massively overbought. So this is almost, in my opinion, a trait of a meme stock in a sense. Warner Bros. Current price to earnings ratio is 60, but before the last quarter, we were actually down at -2. So this company has only just broken into profit. Obviously, it's been around for a while, but they have had their issues recently with their profit taking. So it's fair to say that there is inherent risk within this stock, and it is acting like a meme stock right now. So I am very cautious, especially when these Bollinger Bands are so much lower on the high end than where the current price is. It suggests to me that we can expect a relatively sharp pullback on this stock, unless of course it does continue to act like a meme stock like Open Door did a few months ago, and it just pumps up from here. So looking on these price targets, if we ignore the bottom two because they haven't been updated for a few days, from this current price now, the nearest price target, or the highest price target, sorry, is only, well, it's changing all the time, 3.97% away from where the current price is. Now, I think if this deal is to go ahead, then these price targets will drastically change. But for right now, I do not expect them to change at all. And I think that would be quite a silly move from these analysts if they were to change them now. So to conclude the chart analysis, it looks really good, and it certainly did look really good when I bought in. Obviously, I didn't know it was going to pump up for this exact reason. I just saw the momentum, and I so happened to benefit from this recent news, of course. But for right now, if you're looking to buy in, I can't recommend it. But of course, this is not financial advice. But I personally would not be buying into Warner Bros. When the chart is looking like this. You might be able to make some money if it does continue to act a bit like a meme stock. I'm not saying it is a meme stock for the record, but it's acting like one currently. But for me right now, I would stay away, and I am potentially going to be trimming my position now we're at these highs. Okay, so looking at Warner Bros., what can we somewhat expect in the next 12 months for their growth? Well, for this current year, analysts are expecting a 375% growth for this year. However, if we look to next year, we actually then expect this to shrink by 117%. So very, very volatile. And if we do look to surprise rates here, we've seen two relatively decent, consistent high surprise rates, but then we see a massive low surprise rate for Q4 2024, and then again in Q1 2025. But what can we look at for their financials? Well, we're looking at a retention rate over the last 5 quarters. This company has a mean of minus 19% on a retention, which is expected with the only recent well, not the only one, but there's 2 actual quarters here where they did break profit, which was this one here and the most recent one, which was a 16% retention. The liquidity ratio comes in at a 0.11, which is really not good. That means for every dollar of debt in which this company owes, they have about 10 cents of liquid cash to pay that back in. And looking at the free cash flow, this is actually relatively positive, as it is in the positive, of course, but I would really like to see this slightly higher and possibly a bit less volatile, and would just like to see it increasing rather than increasing, decreasing, increasing. It just doesn't show long-term prospects realistically. So if you were to put money into this stock for the last year, what was the probability of a positive return on a day? Well, looking on this normalized distribution bell curve, we can see that the probability of a positive day was at 54%, with the probability of a negative day at 29%. So obviously looking at this, I mean, you can just see that from a chart, obviously, but if you were to be swing trading it, then you're 54%. Well, it's a 54% chance that you will swing trade on a positive day, but that doesn't speak for future results. Looking at the mean of the surprise rate, which we went over a minute ago, this now actually comes in at minus 92% over the last 4 quarters. And if I use here the actual current year growth estimate, we can see I get a bullish intrinsic value of $18.46, which is barely just above where we are, $18.41 as of recording this. And if you factor in margin of safeties, you're going to be well below. So that's the bullish intrinsic value. If we go to the bearish, it actually comes in at $10. So it currently looks to be as if this stock is overvalued according to Graham's formula, and that's for this current year's growth. That's not even next year's, because next year's would be a negative number. So that's something in which is really important to note. Looking at Peter Lynch's valuation here, this comes in with a score of close to 1, which indicates that it's fairly valued but not massively accurate. And if we look at my formula in which I created myself, I generate an intrinsic value for this year, and when I say this year, I mean ending in December, for this stock to be worth $22.67. Now, obviously, this is not financial advice. I'm not saying that is where this stock is going to end up, but this is just what the numbers crunch to. And if you factor in a margin of safety, this gives you an acceptable buy price of $17. Okay, so now let's discount some free cash flows. Yay. So looking here on a discount free cash flow analysis, taking their free cash flows and projecting it 9 years into the future, we expect the stock price of Warner Bros. To be $274. Now that is actually quite impressive. That's really good. And if we look at the 3-year growth, we can expect this to be at $91. And this year, the stock should be worth $30, which is obviously above where my intrinsic value comes in. But it's still actually really positive to see, especially when a company is as volatile as this with their free cash flow. So that is Warner Bros. I don't want to go on for too long because I feel like this video is already really long. So to conclude, I would be out of this right now. Well, I'm going to be personally trimming my position. I will not be looking to buy any more. I feel like this is overhyped at this point, especially because it's potentially being bought out. It's not even confirmed. And if it is confirmed, then there will be regulatory and antitrust scrutiny. So that is Warner Bros. This has not been financial advice and should not be taken as such. If you have enjoyed this video, please do leave a like. It would be greatly appreciated. With that being said, I'll see you for the next video.